Okay. So, good evening, everyone. Welcome to Currency and Commodity Research Club. This is our live show unveiling the world of commodities, covering all about bullion, energy, base metals, and more. So, let's quickly start with the session. About bullion, gold price dropped slightly on Monday due to uncertainty surrounding the Federal Reserve interest rate decision and concern about weakening economic growth. And the strong US non farm payroll data for May suggested the hawkish outlook for the Fed and potential for higher interest rate. The central bank may hold rates steady in the June to access the impact of previous tightening measures. The strength for the US dollar and driven of expectation of elevated interest rate may weigh on gold prices. So the passage of bill to raise the US debt ceiling increased risk appetite and diverted investor away from the safe haven assets like gold. Spot gold and gold future traded near 2 months low. In the physical gold market, demand slowed in India due to higher prices, while weakening Chinese currency supported the premiums in China. So technically, MCX gold holds a support near 59,200 level, below which could see a downside momentum, and it holds a support near 21 weekly moving average, which is placed near 58,650 level. So overall, buyers remain bearish for gold, where immediate support you can see near 59,225 to 58,700 level, and resistance is near 59,800 to 60,100 levels. M6 silver is trading below 62, 50, sorry, 72 650 and could see sideways to downside momentum up to 70,300 to 69,600 levels. On energy part, even like crude oil prices rose on Monday as Saudi Arabia, the top global exporter, announced its commitment to further production cut of 1 million barrel per day starting in July. So this move counteracted the negative market effect that is caused by the macroeconomic factor. So the voluntary cut by Saudi Arabia, in addition to the existing agreement of OPEC plus allies to limit supply until 2024, aiming to boost the oil prices. So the additional cut is expected to deepen the market deficit and potential drive prices higher in the coming week. So the recent meeting had a positive impact on oil market with a reduction in production target aligning with the actual production level of some OPEC countries. Additionally, the United Arab Emirates, that is UAE, are allowed to increase the output target to address concern about leaving OPEC. So, and in United States, the oil rig count decreased due to its lower level since April 2022. So, reflecting slower drills activity due to lower price and other factors. Technically, MCX crude oil June on the daily chart had bounced back from its multiple support zone near 5570 to 5000 levels, 5500 levels. So where it has also trading about 21 daily moving average, which is placed near 5930 to 27 levels, indicating for bullish momentum up to 6170 to 6350 in the coming session. On natural gas prices increased by 1% to settle near 81.9 due to forecast indicating higher demand over the next 2 weeks and record export in Mexico. So this price rise occurred despite near record US gas production and lower amount of gas flowing to US natural gas export plant due to maintenance. And the average gas output in the US has slightly decreased in June compared to previous month. And meteorologists predict that the weather in the US will remain mostly normal until 15, June 15th, after which it will become warmer than usual. So this will have a positive impact also as US gas demand include export It expected to rise and leading to increased gas consumption of power generation and air conditioner. US export to Mexico has already increased this month compared to May and last year. So the market is currently experiencing short covering with a decrease in open interest. And the support for immediate support level for natural gas is near about 177 level, and it hold a very strong support of 166 to 165 levels, where it potential resistance is near 187 to 195 levels. Let's come to base metal side. Copper prices closed slightly higher on Friday due to strong non-farm payroll data in the US, leading to expectation of continued interest rate hike by the Fed in July. Most base metal maintained their gains supported by the weaker dollar and unexpected expansion in China manufacturing PMI. However, the concern about uneven recovery persisted as the official data showed a contraction. The upcoming US non-farm payroll data is eagerly anticipated and it would could impact rate hike expectations. Although a rate hike in June is unlikely, some policymakers have hinted a pause in June. So, but potential tightening in coming month, which is in July. Additional measures from China to support the property market may provide further support in base metal. And base metal prices have declined past week as economic reading from the major economic raised concern about the slowdown in demand for the metals. So this week the market may focus will be on trade data from China and US service sector activities for further market cues. Okay, so base metal prices are likely to stay with uncertain due to anticipation of interest rate hike in US. So there is an expectation that the Federal Reserve will pause its interest rate hike in June, and technically MCX copper June on the daily chart has bounced back from its multiple support zone near 693 to 697 level, where it's also trading above 50 weekly moving average, which is near 707 level, indicating for bullish momentum up to 727 to 736 level in coming session. So that wraps up the latest update for this week. If you enjoyed the information, we would greatly appreciate it if you could show some support by liking, sharing, and subscribing to our channel. We'll return next week with fresh updates. Wishing you a wonderful week ahead, and a big thank you for ongoing support. Goodbye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.